Hi folks, this is Sean Hyman. Welcome to Chart of the Day, and I want to talk to you about a trade that we just closed out in our currency cross trader service, and how by exercising patience we reap a huge reward. And I want to take you through this trade and give you some insight into what I was looking at, and kind of back up and backtrack after the fact here, so you can mentally walk through what I walked through. This is the Aussie Kiwi pair, Aussie New Zealand, and it had been in a downtrend, which is seen by this red downtrend line. The pair broke and closed above the downtrend line here. I wanted to give it another day or two to make sure that it did hold and not go dip back into the downtrend the downtrend that it had been in before. And there's also this inverse head and shoulders pattern. Here's a left shoulder, a head, and then a right shoulder. It had broken a neckline, which means that pattern completes, and that pattern gives you a minimal price target when you measure from basically the tip of the head, and I just used the common area that this went to, straight up to your neckline. You take that line and project it up, and I've used that same line here, the same distance, just duplicated it and brought it up here, and you get a minimum price target. And so what I did was I had a price pattern here that completed and triggered. It broke a neckline, it broke a downtrend line, it held above them. I waited a couple of days. Now this will also tell you and show you that you don't have to be the first one in. You don't have to be so quick to hit the buy button. You can allow a trade some time to see how well it acts and holds above a trend line before you enter. And so we entered here at basically 125.63. By the time this went out, there were some that were able to get it lower, but we're going to go with the more conservative price of 125.63. And we had to have a little bit of patience with this, because just because the trend line breaks does not mean that it immediately launches forward. Sometimes it will go sideways, which is basically what we did here, kind of an up and down, which ended up making it about sideways overall, looking back on it, before it launched forward. So in other words, it broke out, consolidated, gathered some steam, and then headed higher. And so we were actually in this trade a few weeks. So we get in over here, and we're waiting it out. It dips down a little on us. That's very common in your trading. It doesn't mean you've made the wrong analysis. It means you're going to need to give your trade some breathing room, and that's when we have wider stops. Launched forward, only to give it back a little bit. Launched forward again, only to give it back a little bit. But again, I didn't get discouraged, because this was just a consolidation that it was going through. And so once it built up steam, kind of retested the area of the downtrend line for some support, and not going exactly down to it, but anywhere in this region, is basically a retest of that area. The fact that the market took it up higher and didn't even let it touch this line, that was another bullish sign. We went back up through my buy price of 125.63. So, again, some people had seen this recommendation in our service, and it had missed this initial entry, and on these 2 points could have actually gotten in lower later on than what we even got in on. But again, we're going with this more conservative line, which was the price roughly that everybody had a chance to get on when the actual trade hit the people's email boxes. And then my subscribers started seeing it launch forward, and I mean, from that point on, it was almost like almost every day was an up day. So once it launched forward and we'd made 150 pip profit, we closed out half of our lots, which were represented by this line right here. And then we moved our stop up to break even back here, so that we couldn't lose anything on the remaining lots. We allowed it to creep higher. I released the notice to sell again right up in here. And again, by the time this hit and a lot of people saw it, of course, it was a little higher, but again, we'll go with the more conservative line, and that would put somebody up 200 pips from their original entry point on there. So part of the trade made it 150 pips up. Part of the trade made it 200 pips up. It met our minimum price target for the pattern shortly thereafter, which is another key to start unloading on the trade. Now, it's a minimum price target. It does not mean that it can't go further. Matter of fact, as I'm taping this, within, let's see, about 2.5 hours from when I'm taping it, Australia will come out with their interest rate decision. Again, this is to learn a lesson from a past trade, so this is not something I'm trying to teach you to act upon right now, because I don't trade the exact news events themselves. I look at fundamentals over time, and I think that's a wiser way to do. So I've gotten us out of this trade before the news announcement with the Australian rate decision. Now, the rate decision is anticipated to be a hike of a quarter point, and that would be their third one in a row. So why in the world would I sell ahead of time? Here's why. And you do run a risk of missing some profits, of course, but you also have none of these gains that were made wiped away either by unloading your position. But what I did was I had us come out of the trade, because many times when a pair runs up towards a interest rate hike meeting, in other words, it's doing its run up before the rate hike meeting, what's the market doing? The market is pricing in the thought of a rate hike coming. So by the time the actual event gets here, even if you get the rate hike, there's actually two ways the market could sell off. One is if you get the rate hike and the market temporarily dives off because it had accounted for that in the trade going up to the event. Two is if you don't get the rate hike like everybody expects, and they just hold rates, that would be a disappointment that would cause it to sell off. It's highly unlikely that they would raise by more than expectations. If so, that would boost it even further. So there's two chances that it would go down and one chance that it would go up. So the odds started flipping on us, so I had us come out of the trade. Now, again, I'm still bullish on Australia overall. I might even be back in this trade again, but not at this point, not at this level, with it running up so far so fast and right before the rate decision. I'll see how the pair acts after the rate decision before I go with this or any other Aussie pair. And if it sells off, I'll look to probably buy back significantly lower, and we're probably due for a significant pullback. Because the market will advance, pull back, advance, pull back, advance. We're due for another pullback sometime pretty soon. So you won't catch me shorting this pair, because there's no need to short bullish fundamentals when they're the only country out there lately that has hiked rates twice, and they could be the only major country in the world to hike a third time. No need to pick that as my shorting candidate. I'll pick some dog to do that on, but I won't pick the most pristine fundamentals out there to do that with. And so what you need to do is you allow some patience, allow the trade to come back, be this on Aussie Kiwi, Aussie Dollar, Aussie CAD, whatever, any of these Aussie pairs, and allow the Aussie to kind of blow off a little steam, consolidate again, and garner a little steam for its next advance higher. So this way we retain the gains that we had from the run up, but we don't give them back on the pullback down. So again, though, just one, and again, I got a couple of emails on this because people want to be in and out of a trade so quickly, and they were like, this trade's going nowhere and all that. But that's novice type thinking to get out of a great fundamental trade and a great technical trade when the only thing that is telling you to get out is your impatience. And so we have to be patient in trades, because sometimes these will dilly-dally around and consolidate and build up and coil up in a range first before launching higher again. So don't let that discourage you just because a trade doesn't immediately move and do what you think it's supposed to in the hours following, or even the day or two following. Again, we gave this right at about 3 weeks from the time we entered the trade till the time we exited the trade. And it doesn't really look that long, just looking at it on the chart. But living throughout that trade took a little time, took a little patience. But my subscribers were richly rewarded for it as well. So I think the benefit of being in a trading service like that is that you get the disciplines and the patience of the pro, even if you're a novice. And I think it helps you to complete more successful trades than a lot of times people would on their own. So I would encourage you to check out the Currency Cross Trader service and see what you think about it. And again, we will continue to have these chart of the days coming to you free. You'll receive the remainder of the week free as well, because this is a free service to you. It's not a paid for service, but I think that you'll find that when you are in the the actual currency cross trader service, you'll find that you're in disciplined trades. You're in well thought out trades from a fundamental and technical standpoint, and you will have the confidence and patience to stay in those trades because you know you and a whole lot of other people are in them together, and you can sit through these ranges and consolidations until you get your next fundamental advance higher. And that's the lesson from the chart of the day. Thanks so much for attending. Bye-bye.